Live from Singapore, this is Insight with me, Haslinda Amin, a show where we dive deeper into the stories that matter with crucial context and sharp analysis. Tencent and CATL shares fall as they deny having ties with Chinese military, saying the US made a mistake by adding them to a Pentagon blacklist. We'll have analysis on that, as well as the Nvidia CEO's much-awaited keynote address at CES in Las Vegas with Rayliant global advisors. Also ahead, the race to replace Justin Trudeau, who's stepping down after 9 years as Canadian Prime Minister. Former Bank of England boss Mark Carney says he's considering a run. Insights on what's next in Canadian politics with our expert panel, including a former prime ministerial advisor and an Asia-focused consultant. Plus, we discuss the outlook for India's economy and the RBI's policy path with Bank of America as the rupee hits a new all-time low. Well, we're showing live pictures of Las Vegas where Nvidia CEO Jensen Huang is making his keynote address. A much anticipated speech, of course, coming on the back of Nvidia shares getting to new record highs, sending Nvidia suppliers in Japan as well as Taiwan also higher today, some as high as 6%. There you have it, Jensen Huang speaking in Vegas at the CES event happening right now. Well, our top story today, the U.S. Defense Department adding Tencent and CATL to a Pentagon blacklist over alleged ties to China's military. It is a surprise move coming just 2 weeks before Donald Trump returns to the White House, threatening to further escalate tensions between Washington and Beijing. Avril is here with market reaction. Avril, a surprise.
Yeah, it was a surprise move, but perhaps what was not surprising was the declines we saw at the start of Hong Kong trade for Tencent after already the ADRs tanked 8%. So we opened 7% down, paired some of those declines, but we're back down again. For both Tencent and CATL, these are their steepest losses in months, and this move was certainly unexpected. Weeks before Trump returns to the White House, it's worth noting that the blacklist doesn't in and of itself carry sanctions, but it might deter U.S. firms from dealing with them. And for CATL, just focusing on the company, because this is one of the top EV battery makers in the world, counts Tesla among its clients, and it's coming at a time where there are already questions being raised about China's dominance in the EV space. So this is incredibly unhelpful. As you see there, Hang Seng, in the past 30 minutes or so, those losses have also accelerated past or well past the 1% declines. Let's flip the board and focus on what we're seeing in Tencent, because this is China's most valuable company, and it's one of the benchmark heavyweights as far as the Hang Seng is concerned. When you look at these declines today, it actually takes it to levels roughly where we were before China announced that massive stimulus package in September. So it might potentially put the stimulus-driven rally at risk. Worth also noting that for Tencent, this is not the first time it's been in the crosshairs of the US. We saw the first Trump administration trying to ban WeChat. And of course, when it comes to this blacklist, it did, after all, stem from a 2020 Trump order, as you know. So a lot of things to keep watch on as we watch the trading for these Chinese stocks today, Has.
That's right. And in terms of Tencent, 8 shares were up more than 40% year to date. So ain't too shabby in terms of performance last year. Avril Hong, thank you so much for that. Let's get to Phillip, portfolio manager at Rayliant Global Advisors, who currently owns shares of CATL, which supplies batteries to Tesla. He also invests in other Chinese tech stocks. Phillip, good to have you with us. First off, I mean, how damaging is this for Tencent?
Yeah, it's a pleasure to be here. I think the key is really that this is not the Treasury list. It's not the executive order list. So as Avril said, it doesn't have that immediate threat of sanctions. It's not going to bar U.S. investors from holding these stocks or force anyone to sell. I think what we're seeing now is really the impact of that negative sentiment. You know, it's investor anxiety. We were all thinking about how Trump's policies were going to play out after his inauguration, and we're getting this surprise announcement of another potential escalation in the tension between the U.S. and China. What I would really worry about is that there would be some kind of sanction or export control that affects the underlying fundamentals of these companies, but we're not seeing that here. And so I think this is potentially a buying opportunity for investors that have nerves and willing to stomach these sort of short-term bumps in the road with U.S.-China relations.
Okay, so the blacklist does not come with sanctions, but there are reputational implications here. I mean, chances are some U.S. companies might be reluctant to trade with them, to do business, just because of that blacklist. There will be implications in that sense as well.
Yeah, there's definitely the potential for reputational damage. I think CATL, just to take an example, they don't have huge exposure to the U.S. market. They're a supplier to Tesla. They've entered into agreements licensing their battery technology to Ford, to GM. I think the biggest threat would be that some of those partnerships unwind. But I think the bigger question is, what is this signal as to potential threats down the road come Trump's second term? Is this sort of foreshadowing another turn down in relations and potentially stronger actions against these firms? As I said, I think this particular addition to the Pentagon blacklist in and of itself isn't a substantive hit to the company's fundamentals, and I don't think it's going to have a huge impact.
So, Phillip, you hold CATL shares. This is a buying opportunity for you. Will you be adding to what you already hold?
So we're already overweight. It's possible that we'll add to the position. We like CATL as sort of the characteristic high-quality growth play in China. We prefer the onshore market, so we look at companies that trade as A shares, generally closer to China's real economic growth engine. And I think CATL is in a great position. They have a huge technological lead over competitors. They've got scale that allows them to weather downturns in their industry better than other EV and ESS makers. So I think CATL is in such a great position that we look for opportunities like this to add to the position potentially. And I think other investors should be looking at companies like this. And when there is that kind of hit to sentiment toward China, it could represent a buying opportunity for long-term investors.
How about in terms of Tencent? We know that you held Tencent, you sold the company, you sold your stocks back in 2023. Why is that? And what would prompt you to buy Tencent again? Because if you take a look at the outlook, some people are saying that the gaming revenue has further upside.
Yeah, so that was really a shift from looking at greater China exposure generally to looking more exclusively at the A shares market. I think one of the benefits of A shares, as I said, it's a more diversified sector exposure, so there's less weight on technology. The other benefit of A shares is that there's more of a policy tailwind. So China's strategic support for certain sectors, national team buying that happens sometimes sort of backstop the shares in China, that tends to be focused on the A shares market. I think Tencent is a great stock. They're doing a massive amount of share buybacks, and I think they might buy some shares back on this this little dip in the price. The biggest issue for Tencent, I think, is just competition. Platform companies in general, not exclusive to China. This is an issue in the U.S. as well. They just face more intense competition, and as they get really big, it's harder to grow. So I think that's Tencent's biggest issue. But again, it's a great stock. It's just not in that onshore universe that constitutes our focus.
So great potential both for CATL as well as Tencent, but you got to wonder the impact of Trump policies. I mean, a lot of people are pretty concerned about what those policies might mean and how they might impact Chinese tech stocks going forward. I mean, how are you assessing the risk from Trump policies?
Yeah, I think there's a lot of headline risk. Now, it's not as though Biden's administration was particularly kind toward China either. So our view before the election was that whoever entered the Oval Office in January, that it wasn't going to be great news for China. The question is, have investors priced that negative outlook into shares? And I would argue that China is grossly oversold. And while I wouldn't dare try to time the recovery in China's economy. I think at these valuations, investors who are willing to take that contrarian value play and add China exposure now, I think in 5 years, they won't be disappointed. And it may come much sooner than that. So that's our view toward China and investors who want to allocate to that unloved emerging market.
Phillip, thank you so much for your insights. Really useful to put that in perspective. Phillip Wool, portfolio manager at Rayliant Global Advisors. And even as we speak, we know that Jensen Huang is in Las Vegas at that CES event, delivering that keynote address, coming on the back of how Nvidia stocks reach record highs overnight. Let's take a listen.
You might generate multiple ideas and evaluate, your AI system would evaluate which one of the ideas that you generated was the best one. Maybe it solves the problem step by step, so on and so forth. And so now test time scaling has proven to be incredibly effective. You're watching this sequence of technology and all of these scaling laws emerge as we see incredible achievements from ChatGPT to O1 to O3, and now Gemini Pro. All of these systems are going through this journey step by step of pre-training to post-training to test time scaling. Well, the amount of computation that we need, of course, is incredible. And we would like, in fact, that society has the ability to scale the amount of computation to produce more and more novel and better intelligence. Intelligence, of course, is the most valuable asset that we have, and it can be applied to solve a lot of very challenging problems. And so, scaling law. It's driving enormous demand for NVIDIA computing. It's driving an enormous demand for this incredible chip we call Blackwell. Let's take a look at Blackwell. Well, Blackwell is in full production. It is incredible what it looks like. So first of all, there's some, every single cloud service provider now have systems up and running. We have systems here from about 15 computer makers. It's being made about 200 different SKUs, 200 different configurations. They're liquid-cooled, air-cooled, x86, NVIDIA Grace CPU versions, NVLink 36 by 2, NVLink 72 by 1, whole bunch of different types of systems so that we can accommodate just about every single data center in the world. Well, these systems are being currently manufactured in some 45 factories. It tells you how pervasive artificial intelligence is and how much the industry is jumping onto artificial intelligence in this new computing model. Well, the reason why
Blackwell in full production, Jensen Huang there at CES in Las Vegas. Bloomberg subscribers can continue watching at Live Go. You'll also find the big diary entries coming up today as well as later this week, as well as some of the events you may have missed earlier. Keep it here with us. This is Bloomberg.
I intend to resign as party leader, as prime minister, after the party selects its next leader through a robust, nationwide, competitive process. Last night, I asked the president of the Liberal Party to begin that process.
A teary-eyed Canadian Prime Minister Justin Trudeau announcing his plan to resign after more than 9 years in power. Let's get perspective from Amanda Galbraith, partner at Oyster Group, who previously was a consultant and communications advisor to the Prime Minister of Canada and the Mayor of Toronto. Also joining us is Veena Najibullah, Research and Strategy Vice President at the Asia Pacific Foundation of Canada. It provides policy advice and business intelligence. Amanda, good to have you with us. Veena as well. Amanda, let's start with you. It does feel like the end of an era. I mean, once a rising star, now forced to resign. It was just a matter of time, though, right? When it comes to his approval rating last year, it was just 33%.
Yes, Yes, and it's continued to candidly crater. Now there's some polling suggesting that if he were to run in the next election, the Liberal Party's decided voter base is 13% in this country, which is, I mean, historically unprecedentedly low. So this has been a long time coming. The Liberals lost at what they would consider like a bedrock or a very safe seat in the summer. So there's been expectation that at some point he would resign. There wasn't much of a mechanism for the party to do so. So there has been a flurry of kind of public embarrassments for the prime minister, which culminated in the majority of his caucus saying, we do not want to run if you are going to be the Liberal leader. So he took the Christmas break to decide. And now here we have the country has been plunged into a leadership campaign. The government has been prorogued or paused for the next 2 months for that to happen. On the heels of what will be a new President Trump and potentially 25% tariffs. So the country is in quite a bit of disarray.
What happens now? We know that Trudeau will stay in power till a new leader is found. I mean, who are the possible contenders?
There is no one has publicly said they are going to do it quite yet, but that's pretty common at this stage. Former Governor, Bank of Canada Governor, Bank of England Governor Mark Carney is said to be kicking tires and expected to announce. Chrystia Clark, who's a former provincial leader, is also said to be in the running. Chrystia Freeland, the former finance minister, who candidly was the one that kind of drove the knife into the PM's back to get him to resign, and former deputy premier. We also have Dominic LeBlanc, who is now the current finance minister of the country, and also the one in charge of sort of dealing with Canada-U.S. relations, our foreign minister, Melanie Joly, all kind of big names. The interesting part is, with the exception of Chrystia Clark, they're all very closely tied to this prime minister and this party. So given the unpopularity in the country, they're going to have a big challenge, I think, running what will be a very abbreviated leadership race over the next 2 months, which will then culminate in likely the government falling in March, meaning they're going to have to jump right into a general election.
Veena, as we heard, a government in disarray, an economy that needs boosting, that needs stimulus, that needs to be propped up, all coming before Trump comes to power. I mean, how are you assessing the state of the country right now?
There's a great deal of nervousness. As you pointed out, this is all happening 2 weeks before the incoming President Trump takes office. And he's, of course, already threatened Canada with 25% tariffs, which have generated quite a bit of anxiety among business as well as political leadership here in Canada. And essentially, while everybody welcomes a change in government, what is difficult is that for the next few months, we're going to have a lame duck prime minister who has a very weak position when it comes to bargaining with President Trump on these tariffs and other issues. And then eventually, of course, there will be an election, and perhaps that will lead to a change in leadership and a change in party, which could essentially be good news, but we still need to get there. And we have now 3 to potentially 5 months of uncertainty in front of us.
We just heard from Trump moments ago suggesting that perhaps Canada should merge with the U.S. I mean, we've heard him suggest before that Trudeau is actually a governor of the 51st state. You know, how do you see relations between the U.S. and Canada playing out in the next 4 years?
Yes, incoming President Trump has been trolling Prime Minister Trudeau for weeks now. But of course, these the threats or the suggestion of a merger is not taken seriously here. But tariffs are a serious issue, and there needs to be a united Canadian response to this to be able to preserve the economic integration and the economic relationship that we have with the U.S., which is unique in the world. I mean, so much of our trade, more than 70% of our trade, is with the U.S. It's the most important relationship for us, both economically, but also from a security and political perspective. So this is an important moment for Canada to be able to have a united approach. And of course, this also comes at a time when Canada is taking a leadership role among the G7 and among other Western countries as a president of G7. So it's the timing of all of this is really quite difficult, both with respect to the U.S. relations, but also with respect to our standing on the world stage.
Amanda, we talked about the possibilities of those contenders. Carney is one, Freeland could be another, and there's several other names. I'm just wondering, are they the right people? Is anyone the right person to actually turn around the prospects for the Liberal Party? I mean, what are the chances that they will succeed?
I think a view of a successful turnaround for the Liberal Party at this point would be we're at the saving the furniture part of the burning house. Like the house is done. And this is candidly because I think the Prime Minister took so long to do this, right? If they had time, he stepped down in the summer, they would have a longer time for leadership. They could have staged that out, run some time before the election, put some distance between himself and his policies and whoever the next contender is. That is no longer an option. There are events in Canada where new leaders have come in, mostly provincially, and actually done that, but it's rare. And I think at this point, Canadians are, and it's also, we're 10 years into a government, right? And any liberal democracy, that's pretty much the sunset, and we'll switch to the other natural governing party, which is typically the Conservatives here. So I think victory for the next Liberal leader is holding on to party status, perhaps if they're lucky, holding on to opposition, but most likely they'll be the third place party in the parliament. And they know that. But the other thing is the Liberal Party is the natural governing party of Canada. It's one of the most resilient brands we have in this country. So I think they will, and if they're able to hold on and successfully keep the party steady, they could eventually have the crown of prime minister, but not, I think, in the next term, perhaps 2 terms down the road.
And Veena, we talked about how it's a challenging time for U.S.-Canada relations. Might the Trump administration drive Canada to perhaps, close relationships with other countries, even China? I mean, there's been some sort of thawing in relations.
While we've been trying to diversify Canada's trade and economic relations, U.S. is still our predominant trading partner. So there is no scenario in which Canada can somehow replace the U.S. with trade relations with China or India or anybody else. Having said that, it still is important for Canada to continue to diversify and to deepen trading relationships, especially with partners and allies in the Indo-Pacific. China is in a separate category. I don't think the trajectory of that relationship is going to improve regardless of what happens with the leadership. But I think India is one place where there is a possibility of a better relationship with a potential change of government here in Canada, because so much of the tensions between Canada and India has been really personalized in the person of Prime Minister Trudeau and also in the Liberal Party. So a potential change in government in Canada could set a different tone in the relationship with India, which is obviously an important and growing actor in the Indo-Pacific.
Before we wrap up the conversation, Amanda, just one final question. What's Trudeau's legacy? What legacy is he leaving behind?
I mean, he will say his legacy, and he's talked about it a bit, is lifting 1,000 children out of poverty through a child, anyway, where they give money to families for that. He'll talk about national daycare stipend, which has been a somewhat mixed success policy, the liberalization of marijuana. They'll talk about those things. I think at the end of the day, like, he will be a consequential prime minister in Canadian history. I think at this point, his economic stewardship is questionable and will continue to be viewed questionably, I think, for a very long time. But we will, time will tell. Canadians tend to think fondly of their prime ministers a decade or two after they're gone, but most immediately they're usually happy to see them go. So,
Veena, in 20 seconds, the legacy that Trudeau's leaving behind.
Well, I think Amanda is absolutely right that we will have a lot of years to unpack that. But for now, he has done well in the Indo-Pacific region in terms of deepening relations with the ASEAN countries, Indonesia, Philippines, also much more with Japan and South Korea. I think that's positive, but on balance, still a lot needs to be done to raise Canada's status on the world stage.
Great insights. Amanda Galbraith, Nina Najibullah, thank you so much for joining us today. This is Bloomberg. Welcome back. You're watching Insight. We saw some big swings in the dollar after U.S. President-elect Donald Trump denied a report that his threatened tariffs may be watered down. The dollar has narrowed losses since then. Let's bring in Claudio Piron, co-head of Asia FX and Rate Strategy at BofA Securities. Avril's also back with us. Avril, let's start with you. You know what? There's no denying it is going to be a strong dollar environment still.
Yeah, we've seen that last year, the later parts of 2024 especially. It looks like a trend that will continue into 2025. Just recapping what we saw on the dollar overnight, because there was some of its steepest losses in 6 weeks, though it paired those losses eventually as Trump denied those reports. And this is really coming against the concerns that if we see potentially more targeted tariffs, then when it's defense, industrial, supply chain related, obviously what it means for US inflation, the broader global economy, that's going to be a very different picture if the tariffs are broad-based. So we saw those moves in the dollar eventually. And what we're also seeing is also this element of headline-driven trading. And what looks like traders really piling into long dollar positions already at the start of the year, priming it for this risk of a reversal. And I think we can show you this chart courtesy of our colleague David Ingles, which shows you how the momentum is still really favoring the greenback. If you look at some of the trading indicators, the relative strength index, you'll see that in the past couple of months, it's starting to look a lot like what we saw when the Fed was hiking in 2022. So to your point, it's favorable for the dollar.
So dollar to dominate, Claudio, and it's been a rough start for Asian currencies.
Absolutely, and quite rightly, as Avril was saying, the dollar was priced to perfection. And so I think to a certain degree we've had a little bit of a pullback because there's, again, this uncertainty with regard to the extent and how hard Trump will go with these tariffs. But again, it's a combination of the tariffs, it's a combination of the economy performance. We'll have those non-farm payrolls coming up on Friday as well. And again, we have to also, as currencies are just not a one-way street, but a two-way street also, with not only with regards to positioning, but with regards to the other side. So, in terms of European data, in terms of the ECB, and also in terms of China. And I think that's what the market's waiting for, some clarity on that data front as well.
But when it comes to Trump and how, we're back to what we saw during the peak of the trade war, very headline-driven trading. Yeah. What is this going to mean for volatility? And, is it fair to say that the dollar is just going to move that one direction?
I think, we could still get dollar strength and volatility combined. So I think in a certain sense, what is also difficult for policymakers, particularly in this part of the world, is their intervention FX strategy policy as well. This week, we're going to get a lot of December FX reserves data, and hopefully today we'll get China's FX reserves data as well. So we'll see, for what it is worth, how much of a pull, how much intervention there was in December. But I think at certain times, central banks will have to step away and let the dollar run its course. And at certain times, they're going to have to come in and stabilize the market. I think at the moment, though, we'll probably have the dollar still run further because it's happening in a kind of a manageable pace. But I would suggest that maybe after the inauguration on Jan 20th and seeing what we'll get out of there, maybe the central banks will have to come in and try and stabilize the market if we get some headlines that are disturbing to the markets.
One currency that's been particularly hit is the yen. I mean, ended the year at 157 and change. Yes. There's no stopping the yen from going lower. I mean, we take a look at the yield environment. Yeah. Yields are headed higher, and the eco data out of the US is also pretty resilient.
Yeah. Again, so, like you said, we're coming to the other side, the flip side of this, and we ourselves have changed our call on BOJ. So we think, no, we're not going to get the BOJ hiking in Jan 23rd. We'll go for March. And I think that's provided that latitude as well in terms of maybe the BOJ being a little bit more dovish on that approach. So I think that's there. And I think that's going to be an interesting point when we'll look at the response by central banks in Asia, if they still think there's a window for them to cut despite the strength of the dollar. So Jan 23rd BOJ, potentially Jan 24th MAS, and whether the Monetary Authority of Singapore decides as well to do preemptive and move the slope for a softer, which again would provide more leeway for the dollar to move higher. Just coming back to Japan as well, the Toshin outflows for the beginning of this year have been strong as well. So again, it's not, again, adding to the tariff, adding to the US exceptionalism, people are also still putting their money in US equities and even US bonds because they feel that exceptionalism is one of the few places to be where you get a return. So that's also a driver of the dollar.
And I suppose some of what you're alluding to is the building back of yen short positions. What exactly are you seeing in the market?
Yeah, I think we are starting to see that come back through in the market. So I think riding on the coattails of that potential portfolio outflow as well. I think markets are still closely waiting and watching the BOJ meeting as well. So I still think once we get past that point, if the BOJ is a no-show, I think we'll probably get an extension of those positions.
But they've confused markets before.
Yes.
They've been fumbling the messaging.
Absolutely.
I mean, what realistically can we expect from the BOJ then in terms of communication?
From that perspective, that's why I think the actions will be more meaningful than the words. So if there is that no-show on the Jan 23rd, then I think people will add to that position there and then.
I just want to highlight some of the headlines that are coming through. We talked about, just before we got into our conversation, we talked about Malaysia in particular, and there's just some headlines from there. In terms of the Joint Economic Zone, Malaysia will enhance the existing passes. Also, Singapore and Malaysia will be targeting 50 projects in the first 5 years of that economic zone. Of course, we had Avril talking about those projects and the economic zone in particular just yesterday. Just to continue our conversation, Claudio, I want to take you to China. You want also in focus. We've seen how the PBOC in particular has been weighing in, ensuring stability. You know, like at one time, the fix was more than 1,000 pips, stronger than anticipated. I mean, how much can the PBOC do, and how long can it defend the currency?
Yeah, that's another great. You're coming out with the big ones. I would say what's interesting in January, if you look statistically, you use your nice SEAG function on Bloomberg, and you look over the past 21 years. January is usually a strong month for China and the PBOC to fix dollar and renminbi stronger. I think somewhere between 70 to 80% of the past 20 years of Januaries, we've had a stronger fixing for the renminbi. So it's almost as if they come out in Jan and say, we're going to, send a good message of stability to the markets and so forth. So maybe that's what's holding the market a little bit back, although we're trading at the top side of that range. Also, what they like to do in January is maybe do some easing. Maybe it's going to be the reserve requirement ratio cuts and so forth. And we've seen really the bond yields collapse in China as well, which is a sign of deflation. Unfortunately, this kind of, for want of a better word, obstinance in terms of not allowing the FX market to adjust is kind of detracting. They want to ease, they want to support the growth and so forth, but at the same time they're not letting the currency go, which I think will put some downward pressure as well on the equity market, which is what we've been seeing, which may trigger some outflows, which makes their job even harder. I think the one saving grace that we've had in China so far, and this is quite interesting, is that the yields have rallied very nicely. You contrast that to everywhere else in the world, Japan, Germany, the United States, it's glaring, the yield gap. Even in the case of Europe, where growth is also very disappointing, like China, admittedly the policy rates are still higher to some extent. The issue is that they've got more fiscal concerns. I think if we were to get any sign of a fiscal or credit trouble in China, that the debt and the sustainability and the dynamics are more troubling, then we could get added pressure. But for the moment, I think they can muddle it along for January, but we still think dollar renminbi 7.6.
You talked about how the PBOC is in a conundrum, but truth of the matter is, no matter how you look at it, they need to weaken the yuan versus not just the dollar, but the other currencies as well.
Yeah, you're quite right. When we look at the CFETS basket, the overall trade-weighted index that PBOC prefers to use, again, given the weakness that we've seen in the yen, the euro, and other trading partners, that's pushing higher, which is tantamount to a tightening of its kind of financial and monetary conditions. So I think that's kind of counterproductive. Again, we will return to that on Thursday when we get the inflation, the CPI and the producer price index data. If that continues to show that deflationary pressure there, which I think will also spill into the rest of the region, then that is going to be a dilemma for a lot of the central banks.
Well, when you're looking at the PBOC's considerations for the Chinese currency, what do you think is going to be the straw that kind of breaks the camel's back? Where do you think the line in the sand is where you'll start allowing a bit more flexibility? Is it after Trump's inauguration, as you alluded to, or is it going to be until we see the extent of tariffs that come through?
Yeah, I think it is going to be an assessment of those tariffs. So Jan 20th, we should have that speech coming out, the inauguration speech by Trump. Potentially in the next following days, some announcements with regard to the tariff policies and so forth. I think if our expectation is we get some layering in of the tariffs, maybe initial 10% this quarter, then maybe in the third or fourth quarter, another 10% delivery. I think what's interesting as well is that US is not also resorting to tariffs, but also kind of other control measures and blacklist measures and so forth to put China in a box. But again, if that allows some kind of negotiation, maybe that will temper the degree to which the renminbi will depreciate. But either way, the ultimate problem that China has is its trade relationship with the United States is asymmetric. Very limited tariffs that it can counteract with, so it has to allow that renminbi to go. So I think, yes, Avril, in summary, we get those tariffs coming out, China will have to allow for some tit for tat.
Which of the other currencies in the region do you think would be the most vulnerable, and what lens are you assessing this through? Is this the economies that have the biggest trade surpluses with the US that kind of put a target on their backs? Yeah, so I definitely think, we have to look at it more towards Northeast Asia, Korea. We've recently raised our forecast for dollar Korea to 1,500. At the same time now, Korean policymakers are trying to lean into this and support the Korea won, allowing the National Pensions Fund to hedge its outflows more, which will dampen some of the upward pressure on dollar Korea. But Korea won we'd be looking at, I think, in a certain sense, Sing and Malaysia could do well. They could be beneficiaries from this. But, one of the key words that Trump likes to use is reciprocity. And one thing that's come on the radar for the the incoming U.S. administration is that India, Thailand and Vietnam actually have higher tariffs, relative rates, than China has towards U.S. imports. So they could also come on the radar. So I think we have to be a bit careful how we go with this kind of, it's bad for China and it's good for everybody else. So I would be watching out for Korea won. I would be watching out a little bit for Thai baht. And potentially INR we'll have to keep an eye on as well.
Just to touch on China bonds right now, when you take a look at the yields, some say, it'll get to 1. Closer to 1. Some even say it could get closer to 0. What are your own thoughts on that?
It's remarkable. I mean, we've got 2-year yields about 1.02%. It's lower than we were at the global financial crises. 10-year yields have also rallied down to about 1.6. We still like and we recommend the 5-year China government bonds. We still like the 5-year part of the curve. The dynamics for the first quarter are very good because what you have is basically issuance tends to be quite light in the first quarter. Banks, in particular, like to rebuild their inventory holdings of bonds, and also some of the seasonalities in terms of the fund managers in China also add to those positions. Obviously, there's expectations that could make the back end underperform because people think if we get any fiscal surprise, that will add to some supply at the back end. But I think the 5-year is a sweet spot.
So when it comes to Chinese assets, are they already reflecting the weakness of the Chinese economy?
I would say yes, to a large part, particularly in the equity market. But that said, on the bonds, I think what we will find is that as they cut rates, it will add, obviously, to more buying pressure. Because the problem that you have with the bonds at the moment and with the swaps is that there's negative carry. So it's kind of costly to add to those positions because of the market's already expecting, is already priced in terms of the negative outlook. But as the PBOC cuts, that should help to improve diminish some of the negative carry and add to some replenishment of buying pressure.
All right, Claudio, hang tight. We'll be speaking about the rupee slightly later. Coming up, we'll have a closer look at India and the rupee's run of record lows with Claudio Piron. Stay with us. This is Bloomberg. It's 11:46. India's been trading for about a minute now. Let's do a check on the initial action on the Indian market. Sensex up about 0.5% right now. We're seeing gains pretty much across the benchmarks. One currency, of course, that's been front and center is the Indian rupee, 85.74, pretty flat, versus the USD, of course, the Indian rupee hovering at record lows. It's hard for appetite to return to Indian stocks when the rupee is so low. Now, uncertainty is growing over India's approach to currency market intervention and rising rupee volatility. Less than a month since Sanjay Malhotra took the helm at India's central bank, Traders seem to be taking the view that he won't be averse to letting the market decide on the FX rate. Claudio Piron is still with us. Go ahead. An Asia FX and rate strategy at BofA Securities. Yes, the man in focus, Malhotra. People are wondering what he'll do.
Yes, he's kept these cards remarkably close to his chest. Maybe that's a wise thing to do as an incoming governor. We still think the Reserve Bank of India is in the 100 basis point club in Asia. So we've got the Philippine Central Bank, and Reserve Bank of India is potentially cutting 100 basis points this year. We think the window is still open. We think March is still live for us. And we think inflation will behave that way. So our expectation is that will follow through in terms of, and what we're starting to see as well is credit growth, slowing as well in India. So the growth dynamics are coming off as well.
So what do you see the RBI doing in March? 25, 50?
Well, yeah.
Might it do 50?
I still think 25. I think, again, it would err on the side of caution and test the waters. And obviously, as we were just previously discussing, that the global macro picture is quite complex. So I think they'll probably be conservative in their opening gambit.
Cutting against an environment of higher for longer in the US and a strong dollar policy.
Yes.
Wow.
Well, yes, exactly. And I think this is the dilemma that they all face. And, dollar INR, as you've been mentioning, is hovering near record lows. Partly that's a feature as well. I think that they were, and I think a lot of Asian central banks, their game plan was, once it became quite evident that Trump was coming through and the dollar really got lifted, they all came in to smooth that pressure. Now, they've done that. And I think they're unwinding a little bit, particularly when you look at the Reserve Bank of India's forward book position, what they're selling forward. They're kind of letting that run off and letting dollar INR come up. But I think they still have more than ample FX reserves. So when we get that next uplift, they'll be there as well. So.
Ample FX reserves, and we saw that being used to stabilize the currency.
Yeah.
But some are suggesting that perhaps, days of rupee stability are pretty much gone. Expect volatility going forward in 2025.
Well, it was remarkable. You looked at the Indian rupee last year. It had a lower volatility than the Hong Kong dollar, which is a pegged exchange rate. So, there's a limit to how low that so now they've obviously woken up to reality, and that's a good thing. They should be lying. I think the other important consideration, Haslinda, is that the renminbi being weaker. And if you look at India's bilateral deficit with China, it's been growing wider and wider. And I think they need to lean into that, check that a bit, particularly in the fourth quarter. We saw India's current account deficit widen out quite a bit, partly due to gold imports coming through, and there may be some statistical methodological issues with that. But I think that's why they need to address that. And so it's not entirely out of their control. There may be some kind of policy consideration where they're saying, okay, we need to let this run a bit weaker to offset that renminbi weakness and deal with the deficit a little bit there. And then once they've accomplished that, they'll come in and hold the ground.
The thing is, the two economies, China and India, are pretty much intertwined as much as, people don't normally talk about that, but they are intertwined. And the weakness in the Chinese yuan is not helping Asian currencies.
Yeah, I think the weakness in the yuan is not helping. But again, like you say, the reality is that increasingly, evidently, that China is the biggest trade partner in this part of the world. And it's not just in terms of direct trade relationships, but it's the need that everybody has for China technology and China goods, be it electric vehicles and other important components. So I think that's a real challenge, and that will affect sentiment in the region. And the other thing I would say is that the tariffs in the United States is a negative trade shock to the region, but a secondary impact will be that China being unable to export as much as it would like to potentially into the United States and Europe means those exports will have to find themselves another home within the region, which will put another downforce on disinflation in the region.
Let's talk about Southeast Asia. We mentioned Malaysia just slightly earlier. Some reversal in terms of sentiment. It started off 2024 really in the doldrums, the currency under a lot of pressure. There seems to be some kind of turnaround, investments coming back.
Yeah.
What's the outlook for?
It's really, they've done a good job on a policy level. I think they figured out what they needed to do to rebalance the demand and supply flows on the ringgit. So obviously getting some of the contractual savings institutions in Malaysia to repatriate some of their dividend and coupon flows back into Malaysia for a certain period of time, also with the corporates. That's helped to rebalance that demand-supply dynamic. I think the other issue is that they're delivering on reforms, although it's a slow process. But I think markets do look at, in a world where fiscal dynamics have gone off the charts, I think over the longer run, medium run, countries and policymakers that do deliver on some consolidation will be rewarded. And so I think that's helped as well. And then, as we were just mentioning, the Johor Special Economic Zone, a lot of Malaysia is taking this window of opportunity in terms of the supply chain reconfigurations to capture that inflow. And I think they're doing a reasonably good job at that.
What's been surprising is Vietnam. I mean, take a look at the GDP numbers recently. In excess of 7%, estimate was 6.5 or 6.2, thereabouts. I'm just wondering, what are the prospects for Vietnamese dong, and also the prospects for the economy? Yeah,
I mean, they had a rough period about a year and a half, two ago. They've managed to stabilize, particularly the balance of payments position. They still obviously had some issues on the property market side and so forth. I think the macro side is turning itself around, and we still have the Vietnamese dong depreciating by the very virtue of the fact that a lot of Asian currencies and the dollar is strong and Asian currencies depreciating. So I think that's good news. I still am concerned, though. We have to watch what happens on the trade front, and whether this redirection of trade out of China into countries like Thailand and Vietnam gets picked up, and that gets on the radar. So I think we'll still get some depreciation. What's interesting as well, just looking, I would say, though, while the story is reasonably improving, the premium in non-deliverable forward points is very, very low. So it still pays to hedge, actually. So in terms of risk-reward, I think it would still be better to hedge.
All right, Claudio, always a pleasure to have you on the
Pleasure,
show.
Haslinda.
Do
Thank
come
you.
back. Claudio Piron
Absolutely.
of BofA Securities. Now, before we go, here's a look at Insight for Tomorrow. VS Partners co-founder and CIO Vanessa Xu will be joining us with our market playbook. And of course, a reminder that Nvidia CEO Jensen Huang will be joining Bloomberg Technology tomorrow for more on the future of AI. That's happening at 11:30 a.m. if you're in New York, and the early hours of Wednesday in Asia. And speaking of Jensen Huang, we take you back to CES in Las Vegas. Well, he's been delivering that keynote address. Take a listen.
20 times the processing capability of our last generation Orin, which is really the standard of autonomous vehicles today. And so this is just really quite incredible. Thor is in full production. This robotics processor, by the way, also goes into a full robot. And so it could be an AMR, it could be a humanoid robot, it could be the brain, it could be the manipulator. This processor basically is a universal robotics computer. The second part of our drive system that I'm incredibly proud of is the dedication to safety. Drive OS, I'm pleased to announce, is now the first software-defined programmable AI computer that has been certified up to ASIL D, which is the highest standard of functional safety for automobiles. The only and the highest. And so I'm really, really proud of this. ASIL D, ISO 26262. It is the work of some 15,000 engineering years. This is just extraordinary work. And as a result of that, CUDA is now a functional, safe computer. And so if you're building a robot, NVIDIA CUDA, yeah. Okay, so now I told you I was going to show you what would we use Omniverse and Cosmos to do in the context of self-driving cars. And today, instead of showing you a whole bunch of